Hello everyone, this is Andrew McNair with SWAN Capital with our December 2020 SWAN report. In this month's video, we're going to discuss some recent headlines that influenced the financial markets in November, but I also want to provide you some perspective on what these developments may mean for you over the next few months ahead. Now, as always, please stay tuned at the end of this video for some required disclosure statements. We saw stock prices power higher in November, thanks to a month-long succession of positive news events that really energized investors. And we saw over the month of November that the Dow jumped 11.8%. The S&P 500 rose 10.8%. And the NASDAQ picked up 11.8%. An incredible November. We watched stocks add to gains during the month as reports showed positive stage 3 clinical trial results for COVID-19 vaccines. And while the election and vaccines dominated the news cycle, companies in the S&P 500 reported solid earnings in the third quarter. And some also provided us a glimpse of what could be ahead in 2021. Now, after such a powerful rally, investors may be asking themselves, what's next for stock prices? Can the market continue to go higher? Now, traders expect to watch for the trajectory of the new COVID-19 infections and how that might influence economic activity over the next few coming weeks. But overall, it was the best November for the Dow since 1928. It was also the best November for the NASDAQ since 2001, and it was the best November for the S&P 500 in history. That's fantastic news. But the bad news is that we're seeing new highs in infections and coronavirus-related deaths. And the grim numbers have prompted calls from all different counties, states, that we should have new restrictions and limits on gatherings, such as we saw in the holiday season hitting full stride. We even saw California, that has issued some of the severest restrictions, have LA, Los Angeles mayor went as far as to tell residents to cancel everything. It sounds like a communistic America in some ways. But for the markets, vaccine progress and positive consumer data in hopes of more stimulus have far outweighed all of these negative concerns that we see investors staying abreast upon. But if we see more stay-at-home orders and localized restrictions, it will be hard for the market to shrug these off. Now, we saw President-elect Joe Biden said last week that he would request all Americans to wear a mask for the first 100 days of his administration. But it's not a call at this point for a nationwide shutdown. So let's turn our focus to the job market, because growth, we're starting to see that slow down. The jobs numbers slow down to a really solid and probably more realistic view of only adding 245,000 jobs in the month of November. And we saw the unemployment rate drop to 6.7%. Now, these are less robust job growth numbers that we have seen, but as we're in the upward swing of the Super V recovery, there seemed to be little desire for either side to negotiate or compromise until after the election. Now, politically, with those elections out of the way and COVID-19 on the rise, both parties realized that the very real potential of the economy derailing again and deciding that it's probably a good time for them to talk. See, really, no party wants to be responsible for economic malaise, and they don't want to be blamed for that derailment. And so we're starting to see discussions begin again on additional stimulus. And they've been teasing it for months with the idea of another package, but nothing has came of it. As each side has dug into their ideological lines, the logic was that one side or the other would gain ability after the election and we would finally come to an agreement. But neither side received a mandate, and our county and governments are all seemingly divided. The delay seems to be a form of self-preservation, with neither side wanting to receive blame for lurching the U.S. back into a recession, and talks of a much smaller deal well below the initial $3 trillion package House Democrats have asked for. So, the tease will continue with the stimulus package, but we are keeping our eyes also on valuations of equity markets. We've seen with the Shiller Index, Shiller PE ratios, that the market is overvalued in many aspects. So we're going to keep our eye on equity valuations. Once again, this is Andrew McNair signing off for the month of December 2020. Have a Merry Christmas and a Happy New Year.